If you're in your late 50s or early 60s and you can no longer work due to a health condition, you're probably thinking about Social Security. But here's where a lot of people make a costly mistake. They assume the only option is to file for early retirement at 62. What they don't realize is that they may qualify for a completely different program. It's called Social Security Disability Insurance, or SSDI, and choosing the wrong one could permanently cost them hundreds of dollars a month for the rest of their lives. In this video, we're going to break down the difference between SSDI and Social Security retirement benefits. We'll cover who qualifies for each and which one you should apply for first. Here's what you need to understand first. Both programs are run by the Social Security Administration, and both pay a monthly benefit based on your work history. But they are not the same program. The decision you make about which one to apply for can permanently affect how much money you receive. Here's the key number. Your full retirement age is 67 if you were born in 1960 or later. If you were born in 1959, it's 66 and 10 months. If you claim retirement early, at 62, you'll only receive about 70% of your full benefit. And that reduction is permanent for the rest of your life. SSDI works differently. There's no health or disability requirement. Age is the only factor. For SSDI, you must have a medical condition that prevents you from doing substantial work. In 2026, that means earning more than $1,690 per month. You must also have worked recently enough to be covered. The number of credits required depends on your age, and you must be under your full retirement age. Once you reach full retirement age, SSDI is no longer available. The big difference: retirement is based on age. SSDI is based on disability. If you have a qualifying disability and you're under full retirement age, the choice matters enormously. One more thing worth knowing: if you're a government worker, a teacher, police officer, or firefighter, with a pension from a job that didn't pay into Social Security, listen up. A law signed in January 2025 repealed the old rules that used to reduce your Social Security benefits. As of 2026, those penalties no longer apply. Here's exactly why SSDI typically pays more. When you receive SSDI, the SSA pays you as if you had waited until your full retirement age to claim. You get 100% of your calculated benefit, even if you're only 55 or 60 years old. When you claim early retirement at 62, your benefit is permanently reduced by up to 30%. Let's put a real number on it. Say your full retirement benefit would be $1,500 a month at age 67. If you qualify for SSDI, you receive $1,500 a month. If you claim early retirement at 62 instead, you receive around $1,050 a month, and that lower amount stays with you for the rest of your life. That's a difference of $450 a month, over $5,000 a year, every year for the rest of your life. There's one more important rule. You cannot receive both SSDI and retirement benefits at the same time. The SSA pays whichever benefit is higher, and once you reach full retirement age while on SSDI, your benefits automatically convert to retirement. But the amount stays exactly the same. Now, here's a strategy a lot of people don't know about. SSDI applications often take 3 to 6 months, sometimes longer. If you need income while you wait, you can apply for early retirement in the meantime. If your SSDI is later approved, the SSA will calculate the difference between what you received and what you were owed. They'll pay you that difference as a retroactive lump sum. If you're already collecting early retirement and you later qualify for SSDI, you can still apply. If approved, the SSA will increase your monthly benefit up to your full amount. But here's the risk. If your SSDI claim is denied, you stay on the reduced retirement benefit permanently. There's no way to undo early retirement after 12 months. That's why the safest move is to apply for SSDI first, before you ever touch retirement benefits. Now here's where most people go wrong. Mistake 1. Filing for early retirement when you actually qualify for SSDI. This is the most expensive mistake. A permanent 30% reduction in your monthly benefit. Mistake 2. Waiting too long to apply for SSDI. Applications take time, sometimes many months, sometimes longer if you appeal. The sooner you apply, the sooner your benefit start date is established. Mistake 3. Assuming you won't qualify. Many people think SSDI is only for severe or obvious disabilities. The SSA evaluates whether your condition prevents you from doing your past work or any other realistic work. It's worth applying even if you're not sure. Mistake 4. Earning over the limit while your application is pending. In 2026, earning more than $1,690 a month can disqualify you from SSDI. If you're still doing any paid work while applying, stay aware of that threshold. Here's the action you need to take today. If you are under your full retirement age and you have a health condition that prevents you from working, apply for SSDI before you apply for retirement. SSDI will almost always pay you more. It gives you your full benefit amount, years before you'd otherwise be eligible for it. If you need income while you wait, you can file for early retirement as a bridge. But understand the trade-off. SSDI retroactive payments can help make up the difference if you're approved. To figure out which program applies to your situation, visit ssa.gov or call the Social Security Administration directly at 1-800-772-1213. They can review your work history and help you understand your options. We've put together a free step-by-step guide on everything we covered today. You can download it at govclarity.net. Completely free, no email required. The link is also in the More section below.
Thank you for watching GovClarity. Remember, you can find our complete guide and all official links in the More section. If you found this helpful, please like, subscribe, and share it with others who might benefit. Remember to hit the notification bell so you never miss our latest videos. We're here to make government procedures easier for you every step of the way.